It's the 27th of January and the markets are looking very red. So, what's going on? If we look at Bitcoin, it's rejected off the 106,000 mark and has pulled down and come towards and tested the 98,000. Now, what I will say about this zone is that it's at the key support zone of high volume trading. Now, a few things have happened in the market to cause this, and we will get to that in a second. We've seen Bitcoin break through the 21-day EMA, come down and test this area, which is right in the confluence area of the 55-day EMA. So high volume trading area, key level of support, 55-day EMA. That's a high level of confluence. What I believe is happening right now is that there is a level of inefficiency here with this wick. So as you can see, it's come down, wick there, and pretty much taken out all of this. This makes sense because of the amount of liquidations that have been dealt when that wick came down. If we look at the 4 hour on the Bitcoin, we've seen it break some key levels of support on the EMAs. We can only hope that now it gets the deviation from the bottom, takes the liquidity and starts to move up and can confirm a higher low. If we look at BTC dominance, we see that it's actually rising. So there's two things that can happen in this scenario. This can go up and test this level of resistance at the top and possibly come down, or it could break back in the range, and that would ultimately be very bad for altcoins. Another scenario is that this could settle and come back in the area of support that this wick has. If we look at the USDT dominance, we don't particularly like this rise up because it means that the people are pulling out their money from crypto into stable coins. Now, where a key area that we see here is this level of trend line, multi-year trend line, which anchors around the 4.4%. If this rejects and starts to come down, that's going to look really good for the market. If it breaks back in the range, that's going to be very, very bad for the market, and we would see further red that will come forward. If we look at the VIX, which is in essence a volatility indicator, it states how volatile the markets are and what the level of confidence in the market is. And that spike there isn't very good. And it's because of three key reasons. The first is China's DeepSeek, which is a ChatGPT, I'm going to say, competitor, has shown to have extreme ability to overtake ChatGPT. It's cheaper, it's faster, and it has all the things that could beat ChatGPT, which has caused a bit of a problem in the AI industry. Furthermore, China has developed its first 3 nanometer chip that is looking far cheaper than Nvidia's, and it looks like it's actually faster and more efficient. This is a problem for Nvidia because Nvidia is actually pushing the market forward. And the S&P 500, pretty much 30% of its value is Nvidia. So this and the previous one is going to have a bit of a shock on the market, the S&P 500, and their own all risk on assets. That can be seen by a amazing bleed in the market. You see Nvidia is down 8%. As of now, it's probably down 12%, which is huge for the S&P 500. And it pretty much works with what I thought was going to happen when I said there will be a pullback on the S&P 500. This is affecting everything. It's affecting crypto. It's affecting risk on assets, and including one more thing that is also causing fear in the market. Over the weekend, Donald Trump also imposed 25% tariffs on Colombia, and Colombia retaliated with 50% tariffs as well. The problem with this is that Donald Trump's tariff policy is inflationary, and if he's willing to do this for a country and not just use it as a bargaining tool and actually impose it, that's a real problem. That's an inflationary effect, and the markets do not like that because that will affect Fed policy, that will affect monetary policy, that will affect liquidity, and in essence affect all businesses, funds, risk on assets, S&P 500, and that combined with the AI, combined with the ChatGPT, all together has caused a perfect storm of the markets pulling back, hence this pullback in the market. To add to this storm, there's also an FOMC meeting on the 28th where they're going to decide whether they hold, cut, or rise. I don't think it's going to be a rise of the interest rates. All of this is causing a massive de-risking event in all markets, and so we're going to have to see where this goes. In conclusion, the markets are red at the moment because there is uncertainty and risk that's in the market. We see Nvidia pulling back aggressively. That is the S&P 500. That is what is pushing the S&P 500 forward. And these things coming out from China, whether they are true or not, let's not forget about this. It's very convenient that this comes out when there is a tariff conversation happening between China and the US. Let's see if there's any validity to this. Let's see what's happening. Let's see what the future holds, and let's see what the FOMC meeting does. This week's going to be a bit of an interesting one, and it's getting to a point where all risk on assets and trading is becoming a bit tiresome. And I know that you are all waiting. When is this going to happen? When are we going to get to the next stage? But this is what's key. When people say only a few people make money in the bull run, these things are the reason why. Because every time all of this happens, people just go, just forget it and leave. And that is the moment where the people will have the diamond hands will get to the next stage. Anyway, I'm Alvarez, a 7-figure crypto investor. Like, follow, share, and I'll catch you guys later.